charged up Tesla. Shares of the electric car giant set to rally almost 10% after the firm posted record profits and a Q4 revenue beat. A positive outlook as well from CEO Elon Musk. Musk raising the possibility that the firm could deliver a stronger than expected 2 million vehicles this year. He says recent price cuts have fueled demand, even as he warns that we could see a, quote, pretty difficult recession later this year. Shares of Tesla, which tumbled more than 60% in 2022, are now up more than 20% so far in January. Tesla analyst Dan Ives, a frequent guest on this program, you might remember we talked to him on yesterday's program, says Tesla's Q4 bodes well for the year ahead. Listen.
Look, this was Tesla's Super Bowl. In terms of what's been a dark few months for Musk as well as Tesla, a major bright spot. I think demand story in 2023, pretty upbeat. China coming back post those price cuts, and they made a poker move in terms of cutting prices. Seems like it's paying off significantly. Bulls are going to like this.
Dan Ives, sorry to say it, Gordon Johnson just not buying it. He is the CEO and founder of GLJ Research. He is also a longtime Tesla bear and joins us now. Gordon, good to have you on the program.
Hey, thanks for having me.
So as I said, you are admittedly not a Tesla bull. Help me understand. You have a price target of $24.33, which is a pretty substantial drop from where we are currently. What's your top line reaction to the results and perhaps more importantly, the guidance looking ahead?
Yeah, I just want to correct you on the guidance. Their guidance is 1.8 million cars sold. He said there's a possibility they'll get to 2. 1.8 million cars sold on the 4Q run rate is growth of just 11%. On all of last year is growth of just 37%. They've said they're going to grow 50%. That's how the stock is valued. Okay, so just with respect to the results, we thought the results were very bad. I know that the stock's reacting positively, but let me run through it. So their auto gross margin fell 319 basis points quarter over quarter. Keep in mind, in the fourth quarter, the price cut was just roughly $5,000 across their suite of cars. In the first quarter, which is what's really important, their price cut is about $5,000 across their suite of cars. So their gross margins fell 319 basis points with the price cut in Q4. Let's look at some other Q4 items. Their inventory in Q4 is up 120% year over year. That's a big problem with respect to write-downs. In addition to that, Elon Musk clarified yesterday that their guided 1.8 million of sales this year is not supply constrained. What that means is there's just not demand for their cars. And given that he also confirmed that their price cuts equated to just 1 month of orders, that means they're probably going to have to cut prices again in 2Q. So we can get into some more stuff, but I think this was a bad quarter.
So I take your point that their margins are definitely being squeezed in the midst of these price cuts, but some would argue that they're making a more long-term play, right? They're sacrificing their margins now, at least this is what some of the bulls would say, so that they can get the volume in the future. Do you not buy that?
It's not that I not buy that. Let's run through some numbers, right? So the profit, their net profit, which includes all their service, their regulatory credits and their FSD revenue, their net profit in Q4 was about $3.7 billion. Over 405,000 cars sold. That works out to a profit per car of about $9,000, right? Their price cut on average in Q1 is $5,000. So assume they get another $1,000 of cost savings and you get a price cut of $4,000. You take that $9,000, subtract $4,000, you get $5,000 per car. That's profit, right? Net profit. You multiply that by their 1.8 million of guidance and you get a number divided by their shares outstanding of about $2.69 per share in earnings. The street is currently at $4, and $2.69 per share, based on where the price is today, is a 55 times multiple. That means that the street is saying they're going to grow 55% for the next 10 years, where they're guiding you to basically 11% growth this year. So it's not that I don't buy it. It's just that the valuation doesn't even match their numbers. So anybody who's buying the stock at these prices today, I think is going to be hurt pretty badly.
I want to we can pull up sort of where volume has been over the last few years, Gordon, because I think that's the point you're trying to make, right? Essentially, if you look at sort of the last few years, 1.8, it's still strong growth, but not necessarily what the multiple would imply. Production target appears not so realistic according to you. There does seem to be some debate, though, about whether Tesla does in fact have a demand problem. I know you think that they have a demand problem. Elon Musk addressed this on the call yesterday, essentially saying he wants to put the issue to rest, saying they had one of their the strongest January in terms of sales. Why do you think Tesla has a demand problem?
That's a great question. So the reason why we think they have a demand problem is very simple. BYD has increased prices in China 2 times thus far. VW is increasing prices in China. Tesla is aggressively cutting prices, not just in China, but the US and Europe. Currently, Tesla's run rate demand is about 1.75 million cars per year. Their capacity right now is roughly double that. So they're not even selling half of their existing capacity. That is the quintessential definition of a demand problem, a company cutting prices that can't sell its existing capacity. And with respect to when people say Elon said, believing what Elon says is the equivalent in our view of believing that kid at elementary who said his dad beat Michael Jordan in a game of one-on-one. You know, it's very risky. What do I mean? Elon Musk, we now know that he directed that video in 2016, the Painted Black video, that was basically a complete farce. We know that Elon Musk showed solar panels to justify the acquisition of Solar City that were fake. We know Elon Musk filed a 13G versus a 13D in association with Twitter. So, and we know that, by the way, they just pushed out the Cybertruck another year. The Cybertruck is now 2024, right? That was supposed to happen in 2021. So believing what Elon Musk says, you know, do at your own caution. But if you look at the numbers do not paint a good picture. And that's why the auto industry trades at 6 times earnings, not 55 times earnings, which is what Tesla is currently trading at. Even Morgan Stanley, one of our competitors, said the number is probably going to come in at $3 this year in their note this morning. If that is indeed the case, this stock is going to come down a lot. Look, I know it's up a lot today. I think it's due to a lot of misunderstandings, misreadings, but these were not good numbers. And the guidance, the implied guidance for Q1 suggests a number of like 76 cents when the street's at $1. So I think you're going to have more earnings revisions. Be careful on this stock.
Gordon Johnson, unfortunately, we have to leave it here. But look, I appreciate the enthusiasm and the passion, and we'll have to see what happens with Tesla stock because, look, as we pointed out, last year was a rough year, but so far this year, certainly starting off strong. Gordon Johnson, thank you.
Thank you.